Hi everyone, I'm happy to welcome you all to another video. In this video, we are going to learn about market capitalization. Before continuing this video, please consider subscribing to our channel and let's get started. Why we need to understand the concept of market capitalization is only with the help of this only we can able to find the company whether it is overvalued or undervalued or fairly valued. And in this video, we are going to look what is market capitalization, how it is calculated, how the companies are divided based on market capitalization, and also how to invest your money on the basis of market capitalization. So let's see one by one. Actually, I have seen there is a lot of misconceptions. If the share price of a company is large, then people are considering it as a large company. But that is not true. Actual value of the company is calculated based on its market capitalization. In this, you can see the single share price of MRF stock is rupees 92,200 and the single share price of Reliance Industries is rupees 2,700. Comparing these two stocks, MRF share price is many times higher than that of Reliance Industries. So we cannot say just because this MRF is the large company than the Reliance Industries. Actually, comparing with these two, Reliance is the larger company than the MRF. So in this video, we are going to see what does this market capitalization exactly means. This is how market capitalization is calculated. Market capitalization is very much simple that you can easily calculate by multiplying the total number of shares issued to the public into the current market price of that particular stock. Here the total number of shares does not include the company's promoters holding. Promoters are basically company's owners. We cannot calculate their shares into this account. For example, there is a company called ABC. The total number of outstanding shares or the total number of shares issued to the public is 50,000 shares. And the current market price of one share of that ABC company is rupees 100. With this data, we can easily able to calculate the market capitalization of this ABC company. We know how to calculate the market capitalization. So 50,000 multiplying this with 100. Market capital of ABC company is rupees 50 lakhs. This is how you can calculate market capitalization. Now let us look at this with a real-time example. And the single share price of MRF is rupees 92,200 and the total number of shares issued for the public is this much figure. Calculating the market capital of this company. So the market capital of MRF company is rupees 39,248 crores. Okay, so now considering Reliance, total number of shares issued are this much huge number and the price of single share is rupees 2,700. Calculating all these data, we are getting the market capital of Reliance Industries is rupees 18.4 lakh crores, many times bigger than that of MRF's market capital. Hence, this is why we are saying the actual value of that company lies in this market capitalization. So, okay, once the market capitalization for every companies are calculated, there is someone called SEBI, Securities Exchange Board of India. What they do is, based on this market capitalization, they divide the companies into three segments: small cap companies, mid cap companies and large cap companies. Basically, SEBI is the regulatory body for these stock exchanges, both NSE and BSE. We have Reserve Bank of India, which is the regulatory body for all the banks that are operated. Right? Likewise, SEBI is the regulatory body for all the transactions, for all the trades, for all the shares that are listed in this stock exchanges. Small cap companies are the companies whose market capitalization is less than 5,000 crores. For mid cap companies, the market capitalization lies between 5,000 crore to 20,000 crore, and for the companies with the market capitalization greater than 20,000 crore falls under large cap companies. For speaking about large cap companies, we also term this as blue chip companies or blue chip stocks. And basically there are thousands of companies listed in National Stock Exchange, that is NSE. From that listings, the top 100 companies mostly falls under large cap companies. So here are some of the examples of large cap companies: TCS, Reliance, HDFC Bank, ITC Limited with market capitalization of more than 20,000 crores. Yeah, we speak about the risk and the returns of these companies in the immediate part of this video. Next, mid-cap companies. First 100 companies are large cap companies and 101st company to 250th companies falls under mid-cap companies. Clear? And some of the examples of these companies are CDSL, Zydus Life, VGuard, Indiabull Housing Finance, and so on. And speaking about small cap companies, its market capitalization are less than 5,000 crores. The stocks that are listed after 250 companies are considered as small cap companies. So first 100 companies are large cap companies, 101st to 250th companies falls under mid cap companies, and the companies after 250 falls under small cap companies. And some of the examples of the small cap companies are Ujjivan Financial Services, Equitas Holdings, Nazara Tech, JP Associates, and so on. Speaking about the risk and returns of these companies, large cap companies has low risk and low returns. Mid cap companies has medium risk and medium returns, and these small cap companies has higher risk and higher returns. Like how we are saying means large cap companies are already established companies. The potential for the price of share to go higher is comparatively lesser comparing to these mid cap and small cap companies. Why the risk is low means since this is already well established and well proven companies, they can withstand any kind of economical imbalances, which means this is the safest stocks to invest in. And mid cap companies has the potential to turn into a large cap companies. Hence there is a moderate return percentage, but also the risk involved is also moderate. Small cap companies has the potential to grow into a mid cap company and to a large cap company. So it has this much potential for the returns. But also speaking about the risk, these companies are mostly new companies or not that much established companies. So we don't know, it may withstand the economical imbalances or may not. So most of the cases these companies has higher risk. So what beginners usually does is instead of buying quality high price stocks, they purchase the poor quality stocks in large numbers. That is not the right way to invest. 70% of your investment amount should be invested in large cap companies and 20% of your amount in the mid cap companies, and only 10% should be allocated to the small cap companies. Considering the risks and returns involved, this is how an ideal investor should invest. On the basis of this market capitalization, these are the top 5 companies that are listed in National Stock Exchange. Reliance is the largest company, followed by TCS, HDFC Bank, Infosys, and ICICI Bank. And the respective share prices of these companies are rupees 2,700, rupees 3,400 per share of TCS, rupees 1,605 of HDFC Bank, rupees 1,625 of Infosys, and rupees 946 per share of ICICI Bank. This share price has nothing to do with this market capitalization. Share price is different, market capitalization is completely different. I hope you are clear with this concept, right? And this market capitalization data and the share price data will change day to day. Basically, this is what market capitalization means, and we have seen how to calculate the market capitalization and the classification of the companies based on market capitalization, and we have seen some examples for large cap companies, mid cap companies, small cap companies, and we have also came across the risk and the returns of this large cap, mid cap and small cap companies and how to invest according to that. There are good and bad companies in all these sectors. Whatever the company you invest, reading the fundamentals of that company is very, very important. I have already made a video on introduction to fundamental analysis. I'll give the link in description or somewhere in the card. Kindly check out that video. And there's also another video in this channel. What are the things that you need to watch out before investing in any company? Apart from this market capitalization, there are several other things that you need to watch, and I will give the link for that video too. And please make sure to like, comment and share this video with your fellow friends who are interested in learning share market, and please consider subscribing to our channel. See you all in the next video. Until then, take care. Bye.